We heard today at our annual forecast breakfast for Winnipeg Realtors is quite positive news, considering there has been some doom and gloom out there because of the concern over the federal budget and what's going on with the precipitous drop in oil prices. What likely is to happen in Manitoba, and that was borne out by our feature speaker, Benjamin Tal of CIBC, that it could be very much a plus for most Canadians and certainly for Manitoba. We are up 12% over 2013, and you can see 2013 was well above 2012. So we've really seen a surge in listings in the last few years, and that's certainly well above our 10-year average, back to just a little over 18,000.
It looks to be that 2015 is going to be a great year. We're going to see a slight increase in values, and our market is going to be more of a balanced market, so that'll be good for all consumers. 2014 sales are really right in line with the top 5 years. We're only within a 2% range of our best year in 2007. We're only 42 sales, I believe, off 2013. So as much as it appeared that way because of all the additional listings and supply that was coming on the market each month, we actually had a very good, solid MLS performance in our sales. With the drop in interest rates that was just announced today, a quarter point, that will make all of us realize that fear that interest rates were going up in 2015, that's obviously being postponed till likely 2016, maybe even further out.
This market is tighter than people believe. And that's why I believe that this is a very multidimensional market. The condo market in many cities is acting as a stabilizing force, not a destabilizing force, because it's introducing an element of affordability. There are many, many aspects to this market, very complex market. What I'm saying is that even a complex market can overshoot, and we, I think, overshoot. But the real test of this market will be when interest rates actually starting to rise, because remember, our sensitivity to higher interest rates has risen in a very significant way. So even a small increase in interest rates will have an impact, because the disease is also the cure. Namely, the increase in interest rates will be limited by the fact that we are more sensitive to higher interest rates. But the surprise will be how little it will take in terms of higher interest rates to slow down this market. We are not tested now, and apparently we will not be tested in 2015 and maybe even in the first half of 2016. So we still have a significant amount of time. Clearly, the Bank of Canada is concerned about the negative impact of oil prices on the overall economy, although the main damage is on the West. The rest of the country will benefit from lower oil. Nevertheless, when it comes to the output gap, namely where we are relative to the potential growth in the economy, the bank is concerned that this output gap is too wide. I'm getting phone calls now asking me what will be the impact of low interest rates on the real estate market, namely lower interest rates. And I say, actually, the interest rate story on real estate is asymmetrical. Namely, low interest rates will not give you the same lift that they used to, but when interest rates go up, will be tested. Let me explain. We have an asymmetrical impact on interest rates, something that will really impact your business over the next 2 to 3 years. The story is the following. We have a generation of Canadians that never experience high or even rising interest rates. For them, those extremely low mortgage rates, that's the norm. So it's not as exciting as it used to be. Yeah? Seriously, in many ways, low interest rates, I see low interest rates as like being in a relationship. In the first few months, you are so excited you cannot breathe. But if after 5 years you cannot breathe, you have asthma. What I'm telling you is that lower interest rates cannot lift you, but higher interest rates can kill you. And that's why I don't expect a huge lift from this 25 basis point decline in interest rates on the housing market. It will be there at the margin, but it will not be huge. But when rates start rising, we will be tested. I think that the Bank of Canada would like to see the economy rising faster and closing this output gap. That's the main reason why the Bank of Canada cut interest rates. The impact on real estate will not be as significant as perceived because, again, the sensitivity of borrowers to lower interest rates has been reduced over the past 5 years or so. And you can see that in the past, in order to support activity of roughly 35 to 40,000 units a month in Canada, we needed 10% growth in mortgages. Today, we need 5%. So we need much less mortgages in order to maintain the same activity in terms of the level of activity. Why? The answer is that more and more and more people are paying back principal at a rate we haven't seen before. In fact, if you look at this chart, you can see that the rate at which we are paying back principal is at a record high. So in many ways, people are taking advantage of low interest rates in order to accelerate their principal payments at a rate we haven't seen before. In many ways, Canadians deserve credit for not taking credit here. I do believe that that's the case. I really do. And that's a very good situation. So low interest rates are acting to stimulate principal payment activity, which is a good thing because it means that we will be more ready for the actual test.
The low interest rate environment equals low returns on other investment vehicles, which is pushing investors to search for investment real estate, and Winnipeg is now high on the radar of most investors.
We just found out, as of this morning, interest rates are decreasing, so that'll probably make a lot more activity in the commercial world, which I'm a part of, and yeah, so 2015 should be very busy and optimistic.
2015 will see some larger vacancies hitting the market, and will be a volatile year of wait and see with more acquisitions anticipated, and likely some more high-end retailers taking a look at Winnipeg.
We have seen a much more balanced housing market in years, and I think that's a positive for Winnipeggers and people in the capital region. And given that our prices only went up slightly in 2014, we still have one of the most affordable major markets in the country. And so we have every reason to be positive going into 2015.